Thank you so much for joining us today. I'm very excited to be here. This was a webinar that evolved a little bit in the planning stages. Only a few weeks ago, we were going to do a silver-focused webinar exclusively on silver, but the market has changed a lot in the last few weeks. And as that happened, those of us who were hosting our interest in what we wanted to talk about evolved as well. So I think it's going to be a more broad discussion than that, not just silver today, sort of what's working, why it's working, where we're going from here in the metals space. I'm sure mostly focused on gold and silver. So thank you so much for joining us. Just a few housekeeping notes before I start on my presentation. One of those is that we will have several Q&A sessions pretty much after each presentation. We would love to answer whatever questions crop up from you in the audience. So please send those questions in. It's an easy to find question tab on your screen there. I can see those, and therefore I can send them along to the pertinent person. Anybody who submits a question will also be entered in the draw that we will do at the end of the webinar for a silver coin from the producer in our webinar today, Guanajuato Silver. James is holding there. If you can see
a beautiful 1 ounce Guanajuato silver coin embossed with the resplendent logo of Guanajuato Silver.
Fantastic, right? So anybody who is still online at the end and has entered a question will be entered in that draw, and we'll pick a name at the end of in about an hour when we wrap this session up. So keep that in mind to keep you listening, engaged, and potentially one silver coin richer at the end of all of this. And with that, I'm going to move right in. I'm going to do my talk, and then we'll go straight to Chen, who can lead us through his latest thoughts. And then Chen and I will answer whatever questions you have for us after that. So you can see my first slide, what's working in the chaos. That's what I wanted to talk about today in just a few minutes, or within just a few minutes. This particular slide is probably unnecessary. Just a little reminder that things have been pretty crazy lately. I mean, in the last month, we've had bank failures. We've had historic moves in bond yields. The yield curve, which remains inverted basically across the spectrum, saw some dramatic re-steepening, which is important because inverted yield curves are recession indicators, but they do not offer any help on timing. But often it is the re-steepening of an inverted yield curve that actually does give you indications on timing, as in recession is nigh. So we saw that recession signal flash. The US dollar has dropped quite notably, which of course is helping gold. So things have been crazy. I think that's important as a starting point. Within all of that, what's working? Well, certainly gold and silver are working. Gold is up. These are, I have a bunch of percentage changes over this slide and the next, and they are all over the last 5 months. So since precious metals bottomed last October, or November, what's working? Well, gold is up very nicely, obviously, up 23%. Silver is up as well. And within that, okay, so let's talk about stocks, because that has also been interesting, right? We've had a lot of drama in the macroeconomic sphere, and the overall markets have remained very resilient to that, although there's lots of cracks showing within that resiliency. You know, the biggest tech stocks are once again accounting for a lot of the strength in the market, and the rest of the S&P 500, for example, is not doing so well. But focusing on metals, what's working? Well, okay, so GDX, as an example of gold majors, is offering classic leverage to gold. It's up about twice what gold has gained. 2x is pretty common for what miners will offer on gold. So that's good. Using SIL as an example of silver miners, well, it actually hasn't offered any leverage to silver, which is interesting. I mean, it's interesting, but it's also not particularly surprising. Often we do not get leverage with silver miners until there's a bit more confidence or time endured in a precious metals market. It's that slingshot thing that we talk about all the time with silver. The silver equities in particular are slower to respond to a move in the metal price. the move in the metal price has to show some staying power before attention really spreads down to silver stocks. That is not true all the way across the board, but that is what we're seeing so far with silver miners. Okay, so what else is working now? Because it isn't exclusive to the biggest players in the precious metal space. I was looking through, my portfolio and other sort of listings of things that are working and not working. And I wanted to point out these categories because some of them jumped out at me. Some of the stock moves that I noticed when I was going through various listings were really made me sit up and say, what's going on there? And it made me really think about, well, why are certain stocks moving and other stocks not in this market? So I see that we have precious metals, small and emerging producers. Certainly Guanajuato, who's on the call today, is an example of that, up 66% in that 5-month space that I'm looking back at. There's other examples as well. Victoria Gold is doing well. Calibre Mining is doing well there. That is by no means an exclusive list. It's just a few examples. Small and emerging producers are offering leverage plus growth, plus re-rating, plus catalyst, plus takeout potential. Some or all of the things on that list are what small and emerging producers offer in this kind of moment or in a precious metals market. Then we certainly also, even more so, have some standout performances from projects that really stand out amongst projects being advanced in the precious metal space. So in silver, Dolly Varden is up 216% in the last 5 months. That's a pretty crazy move. Vizsla is up 50%. Also a great move, seems pale in comparison to 216, but it's still a great move to be sure. On the gold side, again, this is not a comprehensive list, but some examples: Newfound up 62%, Troilus up 111%. I'm giving these examples because it is important to note that standout projects are attracting buying. I'm going to comment for a moment on why more broadly we're seeing this division into stocks that are getting attention and stocks that aren't, but let me just finish this list for now. There are also some bottom feeder, that's not really the right word, smallest kind of companies that are also seeing dramatic moves. These are explorers, and officially, you wouldn't necessarily expect explorers to be getting a lot of love at this early stage in a precious metals market. But here's some examples of stocks that sure are. Headwater up 85%. And these aren't in particular stocks these haven't announced discoveries within this 5-month time frame. Let me be clear. These are stocks that are moving in anticipation of work programs. So that's really important. These are not discoveries. Discoveries will work even in the crappiest market, right? If it's a really good discovery, it'll work in the crappiest market. So that would be a bit, that wouldn't bolster my theory right now. These are stocks that are moving in anticipation of discoveries or the ability to advance targets that showed promise. So Headwater, Outcrop, Delta, Black Wolf, these are stocks that are all doing very well. Oops, there's my, and the reason what I have come to think about where I'm sitting right now in my view on all of this is that we were in this kind of bifurcated market very clearly back in 2015. Back in 2015, we'd gone through a very long, drawn out bear market. So many people had left gold, but interest was just starting to come back, right? Those who were really into gold and silver were buying back in because they could see that it was going to change. And it's not just those who are really interested. As that starts to change, then the generalist investors who are paying a lot of attention, who remember historical patterns like what happens when gold and silver markets move, the first wave of the generalist investors joins in. That's what happened in 2016. And the haves that differentiated themselves by the work that they did in 2015 shot through the roof in 2016. And I think that's the sort of pattern that we're setting up for today. There's companies that have done work in the last few years to put themselves in this top tier category, and they are just attracting the attention that we're seeing, that those stocks that I just listed are showing. So some juniors are working. It's the ones that have resources and targets, the ones that have money, the ones that have plans. I know it sounds a bit silly to say plans, but plans is a very important part of this. What do they plan to do with that money in the near term to create new value? And one of the things that has to be part of that plan is a management that really works hard, hustles to market this story. And I know the companies that are on the call today, they fit that category. These guys tell their stories, they sell their stories. And that's important because nobody's going to buy a story that they haven't heard of. I had a long conversation with Sean, who's the CEO of Dolly Varden, yesterday. And I know this is a long quote, and I'm sorry for his verbosity. But I wanted to put it up there because it sort of stood out to me. I know exactly what the next 12 months of my life look like. We've got a team of scientists who wake up every morning focused on finding more silver. And I wake up asking, how do I take this story to more new markets? Already this year, I've been to Monaco, Brussels, Saudi Arabia. I'm being creative in finding family offices. And now with a larger market cap and liquidity, I've got indices buying, and I'm being invited to meetings that never would have happened before in New York and London. This is important. Stocks that have momentum, and they have it not just because of some technical pattern in the stock or anything like that. They have it because they did the work in 2021 and 2022 so that they have the resources or targets, the money, the plans, the new production, the growth, the management hustling the story, that they're attracting the attention. And I think that this haves and haves not bifurcation of the market is going to persist for a little while here until we get another flood of generalist interest into the space. And while it exists, the stocks that are working are going to keep on working. In time, joy will spread to the rest of the market. The rising tide will lift all ships, but we're just not there yet. And that's largely because we still have this sort of recession question hanging, right? So that means that right now, you have a choice. We don't know when the joy will spread to other companies. So right now you can choose to invest in the have-nots, which is enticing because on a per ounce in the ground valuation, they are much cheaper than the stocks that have already moved 50 to 216%, right? Somewhere in that range. But we don't know when those stocks or assets will become relevant to investors. And therefore, we don't know when that revaluation will happen. It might wait until after the recession, whatever that looks like. The other choice is to invest in the haves, who absolutely are more expensive. And it's hard to buy stocks that have already moved 50% or 100%, but they also have momentum. And they have that because the market sees clear potential for significant value growth in the near term via discovery or gold, silver leverage, or both. And so I think that's just a framework that investors can hold on to while they try and decide what to do in the next little while. I'm not really going to talk about this. Base metals also have great fundamentals, but they're not going to work right now. Right now, we're talking about gold and silver. And so that's my standpoint. I think that the haves are working now and they will continue to work. And if you ever want to understand better how to differentiate between the haves and the have-nots, you can feel free to reach out to me, or I'm sure any of my fellow hosts here on the call can also differentiate. It's one of these things that is crucial to investing in turning points when markets turn. So with that, I'm going to stop talking. Sorry that I was talking so quickly, but I had lots to say and only 10 minutes to say, and I spent more than 10 minutes saying it. So with that, I would like to pass the mic virtually over a large distance to Chen. So Chen can explain a little more, can explain what he's seeing out in the market and what he perhaps is doing about it. Chen, go ahead.
Hi, Gwen. Thank you.
Hi.
Excellent presentation. I happen to own a couple of those stocks that works. That was a very, pleasant experience. Exactly as you said, some stock works, some stock doesn't work. It's a stock picker's market. So that in this market, actually, people who know this industry actually will do well. And later on, when getting hot, when this sector getting hot, the money rush in, every stock goes up. But still, good stock will go better. So as you mentioned, so this is just an update. This is my presentation at PDAC and the MIF last MIF. Okay, so I tried to make an update. This is a disclaimer. Okay, so this is my strategy, and then this is my thesis for, I don't have too much time. So this is my thesis of last presentation in March at PDAC and MIF, and just before PDAC. I feel the inflation cannot go as fast as the Fed like, and especially 2%. We have 0% inflation for almost 2 decades. Okay, all these go by cycle. Used to be up and down every 10 years. There's a cycle. This is extremely long. There's so much excess in the past 2 decades. So we probably going to enter, my expectation, enter a new decade at much higher inflation, a higher interest rate. And investors, you better get used to it. So that's my conclusion. 2023 feel like 2008 again. That was over a month ago. 1 week later, actually, I was really, sometimes you just got lucky or something. 1 week later, Silicon Valley Bank broke, right? That's just 1 week after my presentation. And then there's a Signature Bank, there's all these bank run. So, and 1 week later, you can see this is the small, those loans, those are small bank are the, our backbones, our business loans. And then the loan drop, one of the worst in the history. Okay, look at this. It's almost the same as 2008 period. So, and then you see that CRE, commercial real estate, that's in the United States we're talking about. Most of the bank loan are coming from small business. So they were talking about the commercial real estate will lead to the next recession, like Gwen said. And the question is how soon and how hard it is. So their Wall Street hedge funds, although analysts start to estimate how much loss there will be in the CRE. They estimate at least 500 billion, maybe to $1 trillion. So those loss is coming in next year, maybe more. So think about what's going to happen. Okay, I just trying to go for this. Okay, so now we say that I feel 2023 is similar to 2008. I want to say that there's a key difference. Okay, investors, they say, oh, why don't we just sell everything? We just stay on the sideline. No, I don't think that's the right strategy. Because first, there's a huge amount of money on the sideline. Okay, let me show you this diagram. You can see that the money on sideline is historically high. Okay, it's over there. You think about that. 2008, when they start, the money start build up. We already here already. Okay, this is the first difference. The huge amount of money on sideline. And second, the United States government already guaranteed all the other banks, Silicon Valley, no matter how small it is. So they seems to don't want any bank to fail. It seems to be written. It's no written guarantee, but it seems to be will be the way it is, especially we have an election coming next year. So all these losses will be socialized, right? So the taxpayer will pay for that. They will be, selling any bank broke. They will guarantee the depositors and wipe out the shareholder and bondholder. That seems to be the way it goes. And then any losses will be come back to FDIC, will be coming for the future, right? So actually, indirectly, the taxpayer will shoulder all the loss. So then what's going to happen to the US dollar? That's another question. So that's a key difference between 2013 and 2008. Okay, so, and then let's talk a little bit about gold, because Gwen already mentioned that this market changed so much. This is what happened to the Russian reserve. All these Forex is gone. Gold stay, right? So that's why all the central bank of the world are buying gold. And then this is Chinese debt. And China right now going through a deflation. Very interesting. We have CPI this morning. And then actually CPI early this week, China shows they're going through a deflationary spiral. So there's a couple of reasons behind it. One is that China COVID, the government employ a lot of people, right? They do all these COVID tests, all the quarantine, and all the jobs are gone. So actually it's very interesting, just opposite to the United States, but because the US and China, the trade has all these trade war, tariff, so this deflation actually not coming much to the United States, even though we have some. You look at today's CPI number, right? The goods already dropped to before, goods inflation already dropped like actually going up a little bit, 1.5%, as low as they can. Most of the inflation coming from the service, so it doesn't really help. So, but from China's perspective, they're going through a deflation, and United States and the rest of the world going through inflation. It's very interesting. And then also we look at it for this year's United States paying the national debt, it continues to roll over. This year likely to exceed 1 trillion, maybe around that. Next year will be more and more. So United States will go through this spiral of the interest payment and add it to our national debt. That's caused all these other people look at use US dollar as safe haven, US dollar as a reserve currency. People will get worried, right? So that's why all the central bank around the world are buying gold. And then gold is real money. Okay, anyway, so let's talk about silver. This is my favorite topic. And this is a very conservative chart. Okay, we are right here, or only like here. So we have a long, long way to go. And then, so basically by 2027, 4 years from now, the solar will be the #1 energy source around the world. Okay, so this is International Energy Agency just upgrade. They keep on upgrading. So the solar energy is the cheapest energy source in the world, okay? Outside United States, I have to put the caveats outside United States and Canada. Because you need to have a lot of sunshine, low cost labor, low cost of land, and then energy infrastructure imperfect. So you can have your solar panel to have electricity. Actually, that works in Puerto Rico too. I have a friend in Puerto Rico. They have, electricity outage so often they start using solar panel. So this is the most recent update, and I don't have too much time. So I just get into. I have been discussing with Silver Institute and then the Metal Focus Group, which Silver Institute employ about the forecast silver demand in solar for over a year, okay? They already upgraded the silver demand last November. Next week, they're going to upgrade again, okay? How much silver are going to use for last year. And then this year likely go much higher. Let me show you this diagram. This is from last week. Okay, and in my discussions with Silver Institute and also Metal Focus, I never have a chance. They never gave me all the data. They said, what's your forecast? Data is proprietary. But the Silver Institute they told me they have very, very similar conclusion with CPM Group. And then last week, CPM Group happened to have a webcast, and I took a screenshot, and I appreciate, actually Jeff, he's a very honest guy. He put all the numbers on one page. Okay, this is his chart. It looks really good, solar taking off, except just a couple of weeks ago, very well-known, okay, this is a very well-known, TrendForce and PV Info Link are very well-known researchers in this industry, just came out for this year's forecast for 2023. You see, it is 350 to over 400. If you put this chart, 350 to over 400, you see this area, can you see that? So basically, the forecast, the latest forecast is we will use solar panel usage will be as much as 2028 to 2030 for most other people are forecasting. So we are advancing so fast. So we'll be around here, this area. So we'll be 5 to 7 years ahead of all the latest forecasts by the CPM, by the Silver Institute. I'm sure this number is pretty good, probably from the International Energy Agency last year, looking backward. So all these are, because it happened so quickly, all these are very outdated, And then I can tell you these numbers are not very aggressive forecasts, okay? Let me say, I don't have too much time, but I tell you the wafer for the solar panel is looking at 900 this year, okay, to 1,000. So these are not aggressive. I wouldn't be surprised at the end of the year. they will be much higher. Okay, this is a more, I think, more down the Broadway forecast I got from China. You can see it's about triple every 5 years, roughly speaking, and then it's quite conservative. Okay, and I don't have too much time. And then those are the metals using silver in solar panel: tellurium, silver, and copper. There's a lot of other metals I use, and they all, you know, this is a chart I like. This is a electrical car, so it will just go up and faster than anybody thought. Okay, so I don't have too much time. Let me just stop here and for some Q&As. So this is my favorite chart from Prescott. Tavi is here. So
Tavi's probably thinking, I was going to put that chart up. We'll let Tavi speak to that chart as well. Thanks, Chen. A few questions. We've had lots of good questions come in. I am going to sort of divvy them up amongst the panelists because we don't have a lot of time for in each particular Q&A. So if don't think that I've forgotten you if I don't get to it right now. Chen, so one of the things that you wrote on one of your slides there is that you do not think investors will stupidly dump gold like they did in 2008. Can you expand on that a little bit? Like, why do you think that will not repeat this time?
Well, so basically there's a discussions right now saying if it's a repeat of 2008, then you should just go to cash and wait for everything drop. But because of there's so much cash on the sideline, that's first thing. Second is that United States government looks like, most likely, no guarantee though, they want to guarantee every bank. So they will not allow any Lehman Brothers moment ahead of election next year. So if that happens, then all the cash where it's going to be, right? We know even we have a 2008 or we have a something 2008 light, eventually gold and silver go higher. So if you miss, you don't stay invested, you're just waiting for this to drop, they may never come. So I have a lot of money on sideline too. I put money in the US government bond, okay, and that's 3 months, 4, 6 months, 12 months. But also remain heavily invested because I don't know, and then this will drop like 2008.
Gotcha. Okay. I guess that another question that I'll take for you right now is about platinum. Can you share your thoughts on platinum, and are you investing in it, and if so, what avenue would you recommend?
Yeah, I like platinum because there is a lot of demand, especially in the hydrogen industry, use of platinum. And then South Africa production is going down. Another producer is Russia. Russia, has problem. The production probably will come down. And there's a heavy physical buying from China. So people already noticed, this is public information. In the past year, any platinum dip below 1,000, China will just buy as much physical as they could. So it happened so many times. So you may just play platinum ETF for future. And when they drop below 1,000, you buy it. Over 1,000, you can sell.
Gotcha. Okay. This is one that I'm going to ask everybody during their Q&A. Since I sort of set the stage with this haves and have-nots sort of framework. And I've had a few people ask about recommendations in the haves category. Is there one? I mean, let's exclude Guanajuato and Heliostar from the conversation because they're here, and we don't want everyone to feel pressured to pick just James or Charles's companies, even though we certainly like those companies. That's why we are on board with them right here. But is there a have company that you like right now that you would talk about despite it having moved? How do you feel about the fact that they've already moved?
That's to me. Well, I own a lot of different companies right now because recently you may saw that on the internet people are talking about bankrupt JP Morgan. If you buy gold, you can bankrupt JP Morgan. Feel like a setup of a silver squeeze.
Yeah, I saw you write about that in your letter yesterday. Talk about that a bit more. So these rumors are that if we can short squeeze JP Morgan into bankruptcy by buying gold.
Well, yes, there are reports on the internet. JP Morgan has a massive short position, quote unquote, of gold, and then we can just buy gold. We'll bankrupt JP Morgan. It's all over the internet, all over Twitter, even all the way cycle to China. And people ask me from China, ask me back, if we buy gold now, can we really bankrupt JP Morgan? I don't know. I'm not a conspiracyist, but I feel the setup is very, very similar to the silver squeeze 2 years ago. So if that really happened, there will be a lot of money rushing into gold and silver. Small cap US listed company will do well, right? So unfortunately, the Guanajuato and Heliostar are not US listed. I mean, if you want to mention a couple, I can say, one of this golden mineral I mentioned in my newsletter, they are doing ATM, so they're doing some raise. The stock is very low. And they're about to start a big mine, which is the ECU. If you remember, 12 years ago, they bought ECU for 300 something million. The market cap was 1 billion. Now it's 50 million. They are getting into production in a couple of months. So maybe there was a bubble 12 years ago, but now it looks awfully cheap, right? So, and then US listed because all these crazy traders from Twitter, from whatever, they rush in, they buy a stock, the stock can go up very, very high. Right now, 20 something cent. Last time silver squeeze, it was over $1. And also, I also vividly remember, because it was my largest position was the First Majestic. When the silver squeeze happened, it's from single digit to over $20. I sold them all. I was very, very happy. Hopefully a repeat. But this, if the gold squeeze, you want more, you want to, organize, just have a portfolio of gold, small stock. If that happens, I do not know. No guarantee it will happen. But it seems like internet, there's a momentum. They're trying to bankrupt. There are a lot of traders say they want to bankrupt JP Morgan by buying gold.
Well, I don't know if we're going to invite you back unless you're offering guarantees, Chen, but I will say thank you. I'll say thank you anyways. We have to move along. I'm sure we could chat for longer. We're going to move into a recorded presentation from Charles of Heliostar. Charles recorded this presentation yesterday. He was unable to join us today, but we do have Heliostar's VP of Exploration, Sam Anderson, here on the line with us, and he can answer our questions after Charles's presentation. So without further ado, let's listen to Charles.
Hi, my name's Charles Funk, and I'm the CEO of Heliostar Metals. Thank you very much to Chen and the greater team for allowing us onto the webinar, and also thank you for allowing us to pre-record. We're in Europe right now, meeting new investors and presenting the new Heliostar on the back of the transformative acquisition to acquire Ana Paula from Argonaut Gold. We were able to raise 20.4 million Canadian last month, close the transaction, and we're on the ground right now getting ready for our maiden drill program and to transform the asset with our vision of Ana Paula as a high-grade underground mine. We can follow along with a presentation that introduces you to the opportunity and the value creation that we see as a company. I note that we'll be making forward-looking statements and referring to conceptual NPV targets that need supporting studies. So please find this presentation on our website for a detailed review. To introduce the company, we're a 50 million market cap company with 148 million shares on issue. I think most importantly, we've got the funding that we require to deliver these rescope steps over the next few months. And so when I introduce this, we're moving ahead on this as we speak. We were able to welcome in some very strong institutional shareholders on the back of this financing. Franklin Templeton, Adrian Day, Eric Sprott, just to name a few, but really strong supportive shareholders backed us to acquire Ana Paula and see through this vision that we have for a very profitable high margin underground mine. On the back of the transformation, we're actually a much bigger company with a very deep bench of projects. We have Ana Paula, which we're paying $30 million total US dollars, a remaining 20 million all triggered by milestones. We have an option on the San Antonio gold project, an excellent project that's really a call option on getting that permitted. And we continue to have Unga, which we believe is an excellent growth project for us in the longer term. We'll focus on this introduction in Ana Paula because that's where we think we can create a lot of value in the next few months. And so as I touched on, our vision for the project is that we think it's a high-grade underground mine. We think it really plays to the strength of the deposits and make for a very capital efficient, very profitable mining operation. And so our internal modeling, our conceptual modeling, has the 230 million NPV on our base case, but we think we can deliver over the next few months pretty significant steps that could potentially double that. And so we're targeting much, much stronger economics on the back of rescoping Ana Paula over the next 6 months. Incredibly, with the permits, with the amount of work done on the project in the past, it's had $75 million invested into the property. We can reach a construction decision at the end of next year, and we could potentially be the next gold mine in production in Mexico and commercial production in 3 years. It's quite incredible when you think how quickly this project can move forward from today. We also have a growth goal above and beyond the development goal. I'll introduce the high-grade panel, and we think we can grow that to in excess of 1 million ounces. We think we can grow Ana Paula as a whole over 2 million ounces. And then we've got a massive land package in one of the most prospective gold belts in the world, with 15 and 20 million ounce deposits cumulatively mined and in resources right on our doorstep. And so lots of growth above and beyond the clear development pathway immediately in front of us. If you look at where we are, this is what $75 million gets you. You can see a lot of the infrastructure on the project. It's permitted, and we're really going to hit the ground running to take the project forward from that capital invested principally by Alio Gold in the past. If there's one slide that really presents the business proposition, we're looking at it here. In green, you can see our base case, our most conservative scenario, conservative gold price, conservative recovery. We can get a strong NPV and IRR. And if you look at our peers at a 0.3 NAV, that implies we should be double our current market cap. What we're going to work on in addition to that is these steps of putting a mine sequence that brings high-grade ounces forward, of growing, hitting new drill results to infill and expand the high-grade panel, improvements to the network that could really turbocharge the return that we can get and take this from being a very good mine to an incredibly profitable mine. And that's all built on the back of the high-grade panel. You can see here from the 2017 PFS, a really high-grade core to Ana Paula. It's got holes in it like 230 meters at 7.5 grams, 120 meters at 11 grams. This is wide, consistent mineralization. And at the heart of the deposit, there's a zone of 250 meters long by 100 meters tall by 60 meters wide. At a 2-gram cutoff, that's 5.5 grams gold. And everything that we're talking about and modeling here is about underground mining this high-grade panel. And when you look at that panel a little more closely, you can see how attractive it is to us. Here's the panel on the right at just the 5-gram and above ore blocks. And what you can see within that is the consistency of that 5-gram material. But you can also see in these red circles, zones, 35 by 40 meter zones going above 10 grams per ton. That's why we have confidence that we can mine very high grade early in the mine life. You can add, just by doubling the grade in the first year, over $100 million to the NPV. And more importantly, it can drop the payback to just 1 year from 2.7 years. So we've got JDS commissioned to do an underground mine plan. We'll deliver that by the middle of the year. And we think by bringing those ounces forward, we have a really high probability of having a huge impact to the value of Heliostar. The next way that we think we can add value to the project is actually on the resource. If you look at the same view here, but this time with the historic drill holes, you can see the consistency of mineralization. Some of these intercepts, 80 meters at 14.5, 20 meters at 17, 57 at 18, 63 at 15. Incredible, consistent drill results in the high-grade panel. And we think we can grow that up dip and down dip, as you can see in the red circles. But most intriguingly, or perhaps even more intriguingly, if you look at those white circles, they're areas with a lack of drill density. And so you look to the hole, take the westernmost of those in the center of the screen there. The hole to the left is 20 meters at 17 grams. The hole to the right is 63 meters at 15 grams. but those ore blocks in the middle are only just over 5 grams. That's not a function of the geology. It's a function of a conservative resource model that's dropping grade away from the known data points. So if we complete the drill program that we're going to be starting in the next couple of weeks, we think we can add a lot of high-grade ounces to the ore body. We think we can lift it over 1 million ounces. And we think we can potentially even lift the grade from the current 5.5 ounces. These have a huge impact for us in the profitability of the mine. We expect to have our first drill results back by the end of May, and we expect to deliver pretty consistent, hopefully high-grade news flow over the next 6 months, leading to a resource upgrade at the end of the year. Everything we've just talked about has just been focused on that high-grade panel right in the core of the deposit, as you can see on this old Alio section. But there's a lot more to the greater Ana Paula resource than just the high-grade panel. They commenced the decline that's 400 meters long with a view of drilling off the expansion zone, which is open to depth, and something we're definitely going to grow to as a company because there's some tremendous intercepts. It's open at depth, and the whole halo supporting of lower grade mineralization supporting these high grade zones, it is wide open. There's a lot of potential to grow Ana Paula well north of 2 million ounces. If you zoom back another step, I touched on the prospectivity of the Guerrero Gold Belt. We've got a major land package that's hardly been explored. And as I touched on, 15 kilometers away, the Morelos complex, 15 million ounce deposit, 25 kilometers away, Los Filos, 20 million ounces in mined resources and reserves. We're genuinely in elephant country. We have a huge amount of upside in what we could deliver. And so we have a twofold pathway to deliver that. In blue, you can see our development timeline. It's the initial drill program, it's the mine sequencing, it's the network if you go to our website for more detail, and it's an upgraded resource, all this year, all with significant potential to re-rate our company's valuation, then move into a feasibility study next year and reach a construction decision by the end of 2024. Quite incredible how quickly it can move. In parallel, grow that high-grade panel to its full size. We think 1 million ounces is a very reasonable target there. Then look to grow Ana Paula as a whole beyond that, and then look back and see look out and see how big the district as a whole could be. So we have a very catalyst-rich next 6 months. It will start with drill results. I think we have the potential to drill some incredibly wide, broad, consistent, high-grade gold mineralization. I think that alone will remind the market of how good of a deposit Ana Paula is. Then we'll deliver the mine sequencing, we'll deliver the network, we'll deliver the resource. If we can reach that 400, 500, 600 million NPV, if we're valued at the same NAV as our peers, that should be a 100, 200, 300 million market cap company. These catalysts are going to come very quick, and very happy to present this opportunity and show what we can deliver as a team over the next 6 to 12 months. So thank you very much for listening to the presentation. Please talk to Sam, who'll be live for our Q&A, or to come to our website and ask us more questions. We've made a transformative leap, and we're just at the start of getting re-rated on how valuable Ana Paula and therefore Heliostar can be. Thank you very much.
Well, thank you to Charles in absentia. And here to answer questions is Sam Anderson. Thanks for joining us, Sam. And I'm going to start right away with a question from me, which is I'd love it if you could talk about the team that's at Heliostar today. This, as Charles just outlined, what you are all attempting to do is a huge undertaking in a short period of time with clearly defined steps that he laid out nicely, but it is a huge undertaking. And that kind of thing takes a lot of drive from dedicated and experienced people. So talk about your team. Do you feel like you have who you need? Talk about the geology team, how that team meshes with the corporate team. I'm asking this because, of course, I think people really matter in success.
Oh, I think you're absolutely right. And I really like that quote you had from Sean in your talk this morning about the need to be out there both in the markets and really sharing the vision for the company. And that's something Charles, in addition to being an excellent geologist, that's something he does a great job at, is sharing this vision. And I usually tend to be more on the technical side and making sure that we're executing out in the field. So I'm talking to you from Ana Paula this morning. We're getting the drill program up and running, and we've got a great team on the ground here. You know, one of the key pieces in my mind is building that team and then keeping them close with you in a number of projects. The geologists we have here have worked up with us up at UNGA. Our exploration manager, Stu Harris, has 30 years of experience. And this is the thing he absolutely excels at, is being able to get the drill set up safely and get things ticking along very, very quickly. We've got geologists here who are experienced in Mexico. Aaron Hugues, our senior geologist. Jeremy English has a lot of experience with this. So these guys are on the ground making sure that as we get this program up and running, that we're hitting the marks that we need to hit. Now that technical piece of the program, the drill piece of the program, is only one aspect. And I think that's probably a key part of the program. Key part of the question is, okay, we can execute on the reserve part of this. We have that experience and that data, that technical experience. But what about things like the metallurgy? We've talked about metallurgy. We've talked about engineering. Those are two other key prongs of this program. So we've hired a senior metallurgical consultant. I've got a little bit of experience in that. I like to dabble in metallurgy as a geologist. I've spent about half my time on the exploration side and the other half on the mine side, and a lot of that working with the metallurgist to make sure that the ore coming out of the pit goes into the mill and the gold bars come out in the backside. That's something I dabble with and I thoroughly enjoy, but it's important to have those technical experts. So we're working with Arta Brado, who's our senior consulting metallurgist. We're sending samples and working with PMC up in Vancouver, Blue Coast up in Vancouver. This isn't just the Heliostar show, but we're bringing in all the experts we need at the times that we need them. And I think that's the important part. I mean, engineering side, we've engaged JDS Engineering, also out of Vancouver. They have experience on the ground here at Ana Paula. They were the ones that put in the 400 meters of the existing decline. So it's about getting the right people in at the right times. And I think we're ticking those boxes.
Fantastic. I mean, I will admit that the question came to mind because Charles and Sean are similar in my mind. They're both, great geologists, but also great corporate operators out there marketing the story. Tavi, I wanted to ask if you had a question for Heliostar after listening to what Charles had to say.
Just to touch on metallurgy, Sam, would you mind just commenting on what you guys found in terms of recovery studies so far in the ore? I think that'll be helpful to understand the economics of the project as well.
Absolutely. So the original project was envisioned as an open pit mine using atmospheric oxidation to get high 80s, low 90% recovery. In our opinion, that presents some technical and executional risks that we don't want to. That's not a path that we want to go down. The atmospheric oxidation is not a common technology, and I think that's one of the things that we need to look at here is employing basically an off-the-shelf mill process, and that's what you see in the NPV numbers that Charles has run. Is by using an off-the-shelf, a very commonplace processing technique, we can get 70% recovery. That presents with very little risk, and with anybody in Mexico can step into the process flow sheet, the mill that we're talking about constructing, and be able to operate. And even at 70%, people say, well, that sounds low. Well, yes, it does, but we're also talking about 70% of much higher grades. So that's where the panel, that high grade panel, comes into play, and that allows us still to have those high NPV values that you see. Yes, the lower, we have a baseline of lower recoveries, but even in that base case, we have a $234 million NPV with 33% IRR. Now, there's a whole bunch of upside with that, and that's part of this drill program and part of what we're doing. We have a number of paths that we can go down to be able to improve that recovery. Without going into a whole bunch of detail there, most of the old metallurgy focused on the lower grade material outside and peripheral to that high grade panel. As we step back into that high grade panel, oftentimes you see coarser gold, and that would lead to higher recoveries. There's a number of other metallurgical things in there that we're working on, and we believe those are paths that can take us to those improved recoveries.
All right. Well, welcome to another MIF. This is very similar to the one I did in March or a couple months ago. Pretty much focused on silver, but the big picture, which I talk about constantly, is the great credit contraction. So we've got a debt problem. It's going to all funnel down into real money. It's going through these crazy derivatives all the way down to gold and silver. And we've already started it. I've said the run to gold has started, and it has. That's verified by what the gold purchases were last year, biggest in half a century. This is a price chart in inflation-adjusted terms from 1344 to 1998. Why 1998? Forbes put this out when Warren Buffett bought 130 million ounces of silver, and on an inflation-adjusted basis, you can see my cursor down here. He bought at the lowest price ever recorded history from 1344 onward. He is a value investor. By the way, they only delivered 90 million ounces. They couldn't get the other 40 million right away. So he was getting 17% interest for about 2 years before the shipment of 130 million ounces coincidentally went to London, and JP Morgan started the silver ETF. Just a coincidence. So Chen, thank you for all that you've helped me with. And I know you pointed this out a couple times that I said this, but this shows you what the changes are from 1980 and all the metals. The only one that's down is silver, which is pretty interesting. We used to be about 35% of the market 20 years ago, and now it is over 50% of the market. Photography's gone away. Photography was really a misnomer. Honestly, the truth is, if you read my first book, it was a zero-sum game. We never lost a gram of silver in the photography industry, and that's a lie. But just all of the silver came back into solution. You couldn't get a color print if you didn't rinse all the silver off. And did you lose some? Yeah, you spilled some here and there. But basically, it was a zero-sum game. You could just think of that silver being recycled over and over and over again to make color prints or even black and white. So here's something that Chen pointed out. I like to also, a lot of people say, well, there's been so much money printed and that's inflationary. And from the Austrian school, it is. But really what matters is if you print up trillions of dollars and you put it in a warehouse and it doesn't circulate, it's as if it doesn't exist. Common sense. When we have such low velocity, we could talk deflation, we could talk a lot of things. Once that velocity picks up, and this is a psychological phenomenon, it is not a math situation. The money's been printed. It's just when people get scared and start to move it into an asset class. And I made some notes during everyone's presentation. It's always an honor to be on board with such smart people. I'm a bit biased. I really like intelligent people. But when Chen pointed out we have $5 trillion on the sidelines waiting to do something. Now think about what's going to happen in the metals markets. 1% of that $50 trillion buys up 2 years total silver production, mining and recycling. So if we've got 5 trillion, the silver market is 25 billion. So 1% is 50 billion. So think about that. Just 0.5% of that money coming in the silver market, it just blows it away. And of course, it'll be along with the increase in velocity of money, pointing out, kind of ribbing that, I get occasionally, and I'm sure some of my other fellows do as well. But if you look, and of course, I pick in a sweet spot. I mean, I admit that. But over the last 20 years, silver and gold have actually done pretty darn good if you look at it compared to the major stock indexes. Now, this one's interesting because I'm not going to go through the semantics of what comprises a shortage, what comprises a deficit. Is it real or isn't it? All I'm going to tell you is that just based on solar alone, we've got some issues coming in the near future with the silver market, not even counting monetary demand, which will be key as we go forward. But you can see from this chart that we are looking at a pretty good deficit. Now, if you paid attention to what Chen Lin said, you could take one of these bigger bars over here and you move it over here, because that's the truth of the matter. There's a lot more silver being used in the solar industry. And Chen, thank you for the work that you do. Here's something I just want to point out, my friends over at Incrementum. The mine supply has been flat really for a long time. I mean, 10 years is a fairly long time. And you can see back in the 2015s, we're right around 850, 900. Depends which study you use, CPM or the World Silver Survey from the Silver Institute. Regardless, it's flat. Either study would show you that. Does that mean it's going to remain flat from now on? And I would argue for a while, into the foreseeable future. It takes a long time to get a mine in production. And there's going to be, I think, more of a resource war kind of an attitude with these countries that are looking in a potentially highly charged currency war, and what's really valuable and the shift that needs to take place in the financial and monetary systems because of the failure of this fiat fiasco that's been going on since August 15th, 1971. So here we are, solar installations. This comes from Mike Maloney. I know, again, it's conservative. And I want to pause. I made some more notes. So, I wouldn't say I was on top of the world, because I got a pretty good grasp of myself. And it's, but it was really fun. Between 2000 and 2010, silver and gold were going up, up, up. Gold was up 11 years in a row. Silver had a couple of dips in there. And so when I finished that 2000 to 2010 with some pretty good accuracy, I said, well, what will silver do from 2010 to 2020? So I made a study and I put out a blank sheet of paper and I said, I don't know anything about the silver market. Now I'm going to learn something. And what I projected was wrong. I mean, I can look you in the eye. I based it on Jessica Cross's information, primarily on the solar side. I looked at everything. I looked at all the demands. But her projection on solar was much greater than the actuality of it. And why? Because we were able to thrift, which means use less silver per kilowatt hour, about fourfold, I believe, over that 10-year time frame. And that does influence the numbers. But regardless, we are in my view, we are in a place in the silver market where we haven't been for some time. And it's really time to get on board if you have any kind of patience at all. This is kind of my favorite chart. This comes from a new friend, Matt Watson, who's introduced to me from the Silver Institute. And Gwen cut me off whenever I need to, but this shows you what I just said about the miners. So the red line here, my cursor's starting over here on the left so you can see it, but it shows flat like I projected. Is that correct or not? I don't know. We're going to just make that assumption. So the black line is just mining. The red line is mining and recycling. So we're relatively flat at 1 billion ounces a year. So you don't have to take it out to 2050. You could take it out to, say, 2030. Well, we're already up in this area. And what this shows is there's just not enough silver. So what will happen? Well, what will happen is what happened between 1990 and 2006. The above ground stockpiles will be eaten away. And where's that going to come from? Well, it's going to come from investors is where it's going to come from. So the price demand curve is going to accelerate. Remember, PEs being very little in the mining industry. We look at free cash flow. PEs are useful at the end of the market. And a good gold company would be like 10 in the last bull market. A good silver company is almost double that. Silver isn't rarer than gold. The ratio is about 7-to-1 in the ground right now. It used to be about 12-to-1. But the need for silver for our high-tech society just keeps increasing. I do trade the ratio. This is just something that silver spiked. I was lucky enough to have a fair amount of cash in the COVID 2020 March incident. I bought 1 day before the exact low. That's not like me. I should get it exactly right, being funny. But I got very close. And now we're down in here. I think any time that you're above 80, if you're so inclined, you're probably better off with silver and less gold. And of course, when you get down to 30s, we already had that was 33 was that number there. You could swap back into gold or partially. It's up to you. Real estate ratio. Real estate went down a lot and silver was flat last year. So in terms of silver, you might have been able to buy some real estate at a 30% discount if you held it in silver. So it's just something to think about. I like to value silver versus real goods, real assets. Like, you know, what will an ounce of silver buy in the commodities market? What will an ounce of silver buy in the real estate market? What will an ounce of silver buy in maybe in the DJI or whatever? That's the way I like to value it. I don't like to look at the paper price that much because it's really meaningless if we go into a large inflation. This is probably should take this chart out. It just shows that we are really not in the acceleration phase of the bull market. The last time that we hit the acceleration phase, we went from January of 1979 with $6 silver, which is an all-time high. Buying at $6, you were a fool. Buying $6 silver in 1979 January, you're out of your mind. Why would you buy an all-time high? A year later, it did hit 50 intraday, but that's an 800% increase. The share of global assets, I already touched on this. This is gold holdings over here on the right. So any real significant money coming into the precious metals will have a multiplier effect because they're such small markets. And there's a lot of cash, as Chen pointed out, waiting. And the wait is over. The only thing I wouldn't push back on Chen, but I think slightly differently, and he doesn't get a chance to respond. I do think we get a market crash. I think the golds and silvers will come down temporarily like they did in 2008-9. But they'll be the first to recover. And I think it could be a matter of days this time instead of a matter of weeks. And it's possible that there'll be enough people that are holding strong and whatever. The reason I'm fairly convinced it'll happen again is because all this stuff in the large accounts are in a derivative format, not physical. So that's a pitch for the newsletter. I hopefully was on time, Gwen. I'll give it back to you and I will stop sharing.
Thanks, David. I was just about to ask you to wrap it up. I lost track of when you started because of our mistake at the beginning there. So I don't know whether you're on time, but here we are. I'm just going to do one question just to try and get us back on track. But we did have, you were talking about how you like to track the price of silver in other real assets, which was a good segue to this question, which is, besides the COMEX, on which market do you find the most realistic price for silver? So that opens a bit of a can of worms, but do you want to take a stab at that question?
Oh, that's a tough one. Many of you know, and some that asked the question may not, I'm affiliated with a blockchain silver and gold backed cryptocurrency. And we have a world market price, which we are developing the software, but it takes into account the physical market, the eBay market. They're weighted correctly, and we come out with the honest to God price of silver. So I only look at the LBMA and the COMEX as a derivative because that's what they are. They are not a price of silver. They are a price of a piece of paper that can be exchanged for silver in some cases. So,
like I said, a can of worms there that I'm sure David could spend his whole presentation talking about chasing the real price of silver, but we'll leave that conversation for another day. Thanks, David. Let's move on to Guanajuato Silver. James, I hand you the challenge of summarizing everything that Guanajuato is doing in the next 10 minutes.
Okay, very good. Well, that is a tough challenge, Gwen. Thank you very much. I've got 10 minutes to tell you all about Guanajuato Silver. We have 4 mines, 3 production facilities, all in central Mexico. We do like to brag about being Mexico's fastest growing silver producer. And I think as I take you through the story, I think I'll be able to justify that bold statement. We've kept in this shortened PowerPoint presentation for today's webinar, one slide about silver itself and about silver demand. I am a disciple of Chen Lin. I think that Chen Lin does the best research of anybody on the planet in terms of the supply and demand mechanisms for silver as an industrial metal. The other thing that I love about Chen's research is that it's very sober, It doesn't require any grand conspiracies of shorting and people trying to manipulate the market. What it does talk about is the fact that currently silver for photovoltaics within solar panels takes up about 12% of the entire mined silver on the planet. And within 3 years, that should be about 25% of mined silver. Now, what that displaces, and David, you touched on this a moment ago, what that displaces over the next few years, I think is an open question. I don't know, but what it will do is provide so much demand for a very inelastic metal that it must necessarily affect price. Gwen, in some of your slides, you talked about, the robust moves in the price of silver, in the last 5 months, I think. But last month, it's only 35 days ago, silver touched $20. Today, it's 25. That is a big, big move. And I would not pretend to be able to tell people why today that is happening now, but it's going to happen over the next couple of years. And as David pointed out in his presentation a moment ago, sometimes these moves are very, very condensed. So maybe a big part of that move is happening as we speak. So what are we doing at Guanajuato Silver about this robust demand for silver in the marketplace happening now and happening over the next few years? We are creating Mexico's fastest growing silver producing company, and we're doing it in record time, I think. It was only just 2 years ago when we purchased our first production asset, which was the El Cubo mine from Endeavor Silver that had been on care and maintenance for about 2 years. It only took us 4 months to put that mine back into production. Somebody on the presentation said that it takes a long time to put a mine into production, and so it does. Putting these mines back into production, I think we've done in record time and with record efficiency. So within 4 months, we had El Cubo back producing. Last year, in August of 2022, we then added all of the Mexican assets of Great Panther Mining. So that included the Valenciana, San Ignacio, and Topia mines. With San Ignacio, it was only 4 days after the closing of that transaction that we had that mine up and operating again. We ended in December of last year at a run rate of about 3.5 million silver equivalent ounces of production. And we have just provided guidance to the market for the very first time that in 2023, we look to produce 4.6 to 4.8 million silver equivalent ounces. A silver equivalent ounce for us is a little bit more than 50% silver, about 40% gold, and about 10% for lead and zinc, which we get from our Topia operation. So there are lots of CEOs that go on these webinars and like to project all of the great growth that happens in the future. I am no different. I will be shameless about that. However, I do get to look backwards and show people the real life growth in our production quarter over quarter over the last 5 quarters. And I think that kind of growth, again, supports this notion that we are Mexico's fastest growing silver producing company. We will next week put out first quarter numbers. And I will simply say that this production growth profile, we believe, is going to continue quarter over quarter all the way through 2023. So I'll leave it at that. We have been driving costs lower. We do have a number just put out last week. It didn't make it into this slide. It's about $15 and change for a cash cost number. Now, we have bought fixer-uppers. We've bought them very inexpensively, but there is a great deal of CapEx that's needed to bring these mines back into the 21st century, and that's why you have that outstanding growth profile in production. So our all-in sustaining costs, about $20, $21. I think that cash cost measures, though, are really a better metric for judging Guanajuato Silver's performance at this time. We were talking prior to starting the record button and inviting other outside guests about how beautiful Guanajuato is. Chen Lin has been to Guanajuato and gone underground at our mining operations here. It's a beautiful city. It is a city that has parks and a great 450-year history of mining history. One of the reasons that I like to focus on that briefly, it's relatively easy for us to hire an outstanding team of miners in Guanajuato. If you're a young geologist or a young mining engineer, living here with your family on an apartment on the south side of Guanajuato, that is often considered a much better opportunity than living in some dusty little town in Chihuahua with a different mining project. And what that has enabled us to do is to have 100% of the people who work for the company in Mexico are Mexican nationals. So oftentimes Canadian or Australian or American or British companies who go to Mexico, they bring along a 10 or 15% management team to direct things on the ground, which is fine. We've found what we think is it's a different way. What we think is a better way is an ability to have everybody on the ground in Mexico are Mexicans driving the growth of the company forward. We have consolidated to a large degree about 50% of this very divvied up 450-year mine camp in Guanajuato. So I'm going to talk about El Cubo, and then we'll talk briefly about San Ignacio and Valenciana, two of the production facilities, and then we'll talk about Topia briefly as well, which is our other mine in Durango, Mexico. So here's Cubo. We paid $15 million for this asset only. The last time it changed hands was in 2012. Endeavor Silver paid $200 million for it. I think it's very important. We look for bargains in the marketplace. That is the only way that you can have a chance to be able to deliver really good value to shareholders. This is the inside of the plant. Endeavor paid $200 million and then spent about $35 million building all of the infrastructure that you saw on the last slide. We spent about $5 million refurbishing this plant. That is how it looks. I'm going to go on to Valenciana. I know that time is short here, so I'm going to give everybody an abridged presentation of what we're doing at Guanajuato Silver. Valenciana is one of the great silver mines of antiquity. This mine has been in production on and off, but mostly on for 450 years. In the 1700s, this mine or these series of mines were producing about 70% of the entire world's silver. Now, this mine has been underinvested in for a long time. It was certainly underinvested in by Great Panther, who we bought it from. But it was also underinvested in since the 1930s, when a local kind of socialistic cooperative called the Cooperativa mined this in a very old school, traditional Mexican style. They mined what was in front of them. They did not think particularly about what they were going to be mining next year or 5 years from now. There are all kinds of opportunities here to develop enormous areas of the mine. You will note the strike length of what we're showing you here is 4.2 kilometers of one of the world's great, it is called the Veta Madre, the mother vein, for a reason. You can see the resource that we inherit is modest, but at very good grade. And we continue to explore here and develop more resources as we go. This is the plant at Valenciana. It is certainly a little older than what we purchased at Cubo. However, very similar. It's a flotation system. This has 3 ball mills, a 2-stage crushing system, and will continue to be able to produce silver and gold concentrate for us for a long time. So all of those assets that you just saw are in and around the city of Guanajuato, which is in the state of Guanajuato in central Mexico. We are going to talk about our other asset called Topia as well. Topia has been in production for a long time as well, about 70 years. It was once a Peñoles asset. And if any of you don't know that company, Peñoles is Mexico's largest mining company, period. The veins here are very narrow. However, the grade is outstanding. And the grade, from the resource that we have in front of us right now is about 1 kilo per ton, very silvery. The concentrates that we get at Topia, we sell some of them to Samsung, those guys who make the telephones. And most of our concentrates are sold to a British firm called Ocean Partners, which we have a very good relationship with and have been with us all the way through. here is the plant. Again, all kinds of opportunities here. This plant has really been unchanged and uninvested in for about 40 years. So we plan an 18-month expansion. It'll cost us between $3 and $4 million to rejuvenate, revitalize, and expand the plant at Topia. So what does 2023 look like? Kubo will be ramping up to about 32,000 tons a month, just slightly higher than where we are producing at right now. Cata, that is the plant at Valenciana, will be ramping up to about 20,000 tons a month. Topia likewise. Expansion of tailings capacity at El Cubo. We hope to be able to announce final permitting for that, which is going to give us about 15 years worth of life at the tailings at Cubo, as well as a $5.2 million exploration budget for this year. Our shares, and Gwen, it was very nice of you to comment on the sharp rise in our shares from that nadir last summer up to where they're trading today. However, what I would say is that our shares have also materially outperformed our comparables, our competitors, if you will, for the last 2 years. So some of the other companies did have, very sharp declines in that bear market phase that we had and excellent rebounds from that. You can see we held up better through that than others. And so I would simply have our viewers and our investors note that Guanajuato Silver, an investment in Guanajuato Silver, has held up better and performed better than many of its competitors. Our largest shareholders, and I will just take a moment to comment on one item here. We did give up a fair block of shares to Great Panther last summer in buying their assets. Those have now all been purchased by a US-based institutional fund. That's Fidelity. I don't mind saying them out loud, but we can't put them in print. The shares could not have gone to a better place, and you can see that trade on the tape a little over a month ago. So that works very, very well. Also, I'm just going to mention one member of our team, and that is our president, Ramon Davila. I think it's impossible for me to overstate the importance of Ramon's presence in our company. Ramon has had successive many periods of success in mining. I think that Ramon has the best CV in Mexican mining. Success with Peñoles and then with Luis Min. He then went off on his own and ended up owning the La Colorada mine, which he sold to Pan American Silver. He then worked with Ross Beatty at Pan American for about 5 years, and La Colorada continues, in my estimation, to be Pan American's best asset. Ramon then went on to be the COO, Chief Operating Officer, and a founding shareholder of First Majestic. So all of the great growth of First Majestic, when Ramon joined them, they had 4 employees. When he left, they had 4,000. They had no production when he started as Chief Operating Officer. The company that he built on the ground in Mexico ended up with production of 12 million silver equivalent ounces per year. And the only reason that Ramon left was to take on a political role. He became the economy minister for the state of Durango, where he lives and where our Topia operation exists. So that's who's running the operation in Mexico, along with Hernan Dorado, who's been with us right from the start. That's my whole story. So Gwen, happy to answer questions if there are any out there. And if you ask a question and put your name up, you will be able to possibly win. Your name will go in a draw to win a silver ounce from Guanajuato Silver.
Oh, James, you're awesome. Okay, there's been lots of questions. I do want to tell the audience there's more questions in particular for Heliostar and Guanajuato than we can get to in this conversation without this conversation taking up everyone's entire day, which is not an appropriate thing to do. So I'm just going to pick 1 or 2 questions for James. I haven't asked them, but I'm just going to tell them right now that Heliostar and Guanajuato will answer your questions by email later. There's a bunch of good questions, and I'm sure James and Charles or someone on their team can happily answer those questions there. I know they have the answers right at hand. So if we don't get to your question here on the webinar, I apologize, but we will make sure that you get an answer. Going to one of the questions, James. So someone pointed out the relatively small number of listed companies that are in the silver only sector. And given that a bunch of those companies tend to be small themselves, the person is asking, does it make sense from where you stand for some more corporate action so that Guanajuato becomes a more attractive proposition for a major to acquire? So what is there a growth strategy beyond where you are now? You've obviously been buying lots of things over the last 2 years, but what's next?
Yeah, and it's kind of a two-stage question, right? It reminds me of, the little fish in the aquarium gets gobbled up by the bigger fish, and then there's another bigger fish afterwards.
Yeah.
In terms of smaller fish, yes, I agree. We have grown very, very rapidly through acquisition. There are a number of different things, a number of different assets that I look at that I would like to see sort of under our umbrella. I will say that Ramon, on the other hand, is much more discerning than I am. I like all the assets. Whenever we discuss it, Ramon says, "Yeah, James, no, not that one. No." So we will be very discerning with Ramon's help, and I think that you can look at the last two transactions that we did. Yeah, I think it's unquestionable today, as we sit here, that we did not get fantastic value for shareholders. So whatever it is we do, it will be accretive to shareholder interests. And then with regards to bigger company, making us more attractive to the bigger company, that is not the reason why we want to grow. I really don't have any interest in having a bigger company absorb all of the hard work and excellent assets that we have right now. That may well change. I'm CEO, but also chairman of the company. That may well change given the vagaries of the marketplace or opportunities that exist. But I just say that certainly for the near term, medium term, that is not really a desire of ours.
Fair enough. Okay. Bill is asking about positive cash flow. When, how can you talk about positive cash flow? There's a lot of things that feed into that.
Yeah, well, there's a lot of things that feed into it. However, the easiest, most headline, top line issue, and I mentioned it earlier, the extreme volatility in the price of silver. I know we all love what it's done in the last 30 days. I wasn't too keen what it did in the 30 days prior to that. So in the last 40 days, as I mentioned, we've had a print at $20, and now we've got a print at 25.5. So if Bill can tell me what the price of silver is in 3 months' time, never mind 30 days, and certainly never mind 3 years. But I'd be happier to be able to comment on that. What I will say is that on a mine cash flow basis, we're there, but we do take all of that money and then some and put it back into the continued production growth of all the mines. So additional CapEx continues to be a major focus for us.
I know whenever you and I talk about your operations, you have a list of projects that your team is keen to embark on, exploration targets or process plant amendments, and you got to take them one at a time because of the cash flow question.
Well, that's right. And again, I think it makes sense for people, when they get a chance to hear us talk about it. We've bought fixer uppers, right? So when you buy a fixer upper, well, you can get a fantastic deal on it. We have, but invariably you have to spend some money fixing up those fixer uppers in order to get the value out of them. Absolutely.
We're going to move along here because we're already almost at 12:30, which is when we were supposed to be done. So I'm going to move on to Tavi, our last presentation of the day. Tavi, what do you have to add to this conversation?
Oh, thanks for having me. And I will certainly just share my views on the macro side and hopefully also shine some light in terms of what I think it will likely happen with precious metals and some of the important narratives that I think would be relevant for investors. So there's always something that is at the center of my views, at least. And today, this is very much tied to Crescat's views on gold and short-term, medium-term, and also long-term. We've launched a fund because of our views on the long-term, but I also have my views in the shorter and medium-term because we run a macro fund as well. And to me, if there's anything that is, can't find anything that's more relevant than what's going on with the government cash balance right now. This chart needs to be slightly updated because the decline has been over $100 billion from where you see. So basically this white line is how much capital the government has to run its day-to-day operations. And today we're, as you can see, in a major decline of this chart. The question is, every time you see that decline, usually you are at a time when the government is unable to raise cash, meaning unable to issue treasuries or to collect more revenues than what they spend. Well, we've been running a deficit for many decades. And so the tax revenue hasn't really been the solution for this chart to be higher. The solution has been to issue more debt. But when you reached a debt ceiling, you're not allowed to do so until you reach an agreement between the two parties. And while the debt ceiling has been, I think, a big question for investors that was turned out to be relevant for markets over the last 5 to 7 years or so, I would actually argue that this time it looks very important to markets overall. And not because I think we're going to have a default. I don't believe in that at all. I think that they're probably going to have to force an agreement and extend the debt limit. But the real question is, what do you do from there? Do you issue more debt? And one thing is to issue debt like we saw in prior times, in prior debt ceiling situations, when there is no inflation risk and there is no default risk itself. But today, I don't think the market will absorb over close to $1 trillion of treasuries in the market if we do see that debt ceiling getting passed. And so I think that is at the core of a lot of my views, because it could create downward pressure in US treasuries. And that is precisely what caused the banking crisis, is the collateral price of those treasuries, those instruments being pressured much lower. This is at the core because it also explains the reason what we're seeing, the 60-40 transition from those portfolios that have been so crowded. The growth to value transition because cost of capital has been so high. Another question, which is investors that continue to be so focused on the Fed cuts, but that doesn't really matter, because if rates are going to be higher for longer and cost of capital be higher for longer, every single asset needs to be repriced accordingly. And the first question I get is, what does it mean to gold? Well, there has been a lot of, if you understand macro and you follow macro, at least, what you're going to find is that correlations change over time. You have the markets being correlated to a certain way with the treasury market. So therefore, 60-40 portfolios work very well. Every time the equity markets decline, treasury markets went higher. So what a perfect way to hedge your portfolio. That was genius over the last 20 to 30 years. Now, in 2022, we saw that break of that first correlation. We also saw a break of correlation between gold and the Japanese yen. That wasn't the case. Gold or Japanese yen was supposed to be the safest currency on the planet. And guess what? It collapsed while gold kept its ground. Well, let me tell you another thing that broke a correlation in 2022 as well, was global bonds completely collapsed, especially foreign bonds, along with treasuries too, and gold actually held its ground. And so it's important to look back, not the last 30 years, but really other times when we have something comparable to today's environment, which my view, it is until the 70s when you did have this inflation risk being perceived by investors, along with default risk, with the tightening of monetary conditions, knowing that there is a difference between today and back in the 70s, the debt problem. Now, watch or look at this chart and see the correlation between gold and the 10-year yield. It's not like treasuries needed to rally for gold to rally. No, that never happened. Throughout the whole decade, there was a very positive correlation between gold and the decline of treasuries. So you're looking at the 10-year yield, so the yield rising, the price of bonds decline. It's the complete opposite that most investors are aware of in the last 10 years, because everyone is looking at the bond pricing and saying, well, that's going to have a correlation with gold. If interest rates rise, that should hurt gold. That's not true at all. That's not true, because that's not what happened in the 70s. That's what happened in the last 20 to 30 years. So
I think we're going to see that correlation change this year. I think that's going to be a big change, especially because we're starting to see, number one, central banks buying gold for different reasons, and I'll touch on that. I think that's going to be a huge impact on the demand side. It's a neutral asset. Most of the central banks, I'll leave that part of the demand in a minute because I have a chart on that I want to touch on. But, I think that especially when you're looking at the situation of the government, and on top of it, I track a lot of leading indicators to see what happens with equity markets. I think when you made a point about, I think it was a 10 versus the 2-year yields, don't reflect, very well in terms of predicting recessions. I couldn't agree more, actually. That was in 2018 and 2019 when we start seeing some of those inversions in different independent yield spreads. I had a lot of problems backtesting that and being able to, as a money manager, to manage money. What was the best position? What do I need to do with my portfolio when I see an inversion? Because in 2008, an inversion didn't cause a crash until 2 years. Well, guess what? In 2000, in the tech bust, that was precisely when you saw the inversion, you should have been shorting the market. And so what do? Well, that caused me to really go deeper and start researching more in a more comprehensive way of researching all the possible spreads in the yield curve. And I thought this was very interesting to me, at least, that the percentage of yield curve inversions when it goes above the 70%, and this was an indicator I created and actually presented to the IMF not too long ago because of the next chart that I'll show in a minute, because this chart, when you go above 70% handle, you see a hard landing. Now, hard landing doesn't mean anything for a money manager and investor, anything, because you don't know what to do. Should you short the market? Should you be long gold? Well, there are different times where you should be even long the oil prices or long treasuries. Well, I backtested every single time we've had this indicator going above the 70% to understand what we should own. And what I found, and look, I welcome anyone to do research on this as well, because this was, I can show you all the data. In fact, I shared with the IMF, and I think this is the most compelling portfolio positioning one needs to do every time you go above the 70% handle, which in fact, if you go back to the prior chart, we just crossed that in November of 2022. So it doesn't matter how much you go above it. It just matters when you cross that line, what happens to different asset classes. What I found is the best positioning is to buy gold and sell stocks. Well, but you guys are buying gold stocks. I mean to say risky assets, overall equity markets. To be more specific, buy gold and sell the S&P 500, or looking at the gold to S&P 500 ratio during those times. That was by far the best hit ratio of probabilities when it comes to really successfully and efficiently making money during periods when you have this level of imbalances in the credit market. And so in the blue line, you're looking at the performance of the gold S&P 500 ratio right after the 70% handle and the percentage of inversions in 73, 74, and the tech bust. Why those two periods? Because those are times when the commodities to equity ratio were also at historical lows. This to me needs to be in front of everyone's computers right now, because that's the most important positioning for now. In the yellow line, you're looking at every single prior time that we've had all the way back to the 70s when this ratio or this indicator went above 70%. And guess what happened with the gold to S&P 500 ratio? Went up 72%. Note that the blue line went up twice that amount, or about twice that amount. And today we're tracking the same performance of the yellow line currently, which I think there's potential to see even further performance of this. Doesn't matter. Sometimes it's a gold side that works really well. Sometimes it's the equity side that performs really bad. Sometimes it's both legs. In the blue line that you're seeing, both legs of this chart work really well, of this trade work very well. Gold was rising with equity markets collapsing. I think there is a very strong case to be made that we're going to see this today. And we're seeing that actually since we've had this decline of this signal in this indicator. Now, going back to the global central bank assets, which I think it's also one of the most relevant charts for folks that question, why should I buy gold? Well, I don't think I need to really try to change the opinions of anyone in this panel. I think most people understand why we buy gold. There is certainly a monetary hedge, inflation hedge attributes, but also it's been a central bank asset for so many years. And if you look back in history, back in the 70s, gold used to be a very large percentage of central banks' international reserves. It doesn't really matter just to see the gold purchases, but really how much of gold represents their entire reserves, because any monetary system, the euro, the Japanese yen, the Canadian dollar, the US dollar, what creates the credibility of a monetary system is the quality of those reserves. Throughout history, majority of those times in history was gold that created that relevance for or credibility for those reserves. We went through a period, a very strange period, where the last 30 years or so, and maybe you can claim that that was because of disinflationary forces we've had in the economy from the 70s. And some people may disagree with that. That's okay. But the point being that majority of the most credible central banks were the ones holding a lot of US treasuries. Well, that is right linked with the 60-40 portfolios at the same time. So we're seeing not only central banks transitioning from US treasuries into gold, not just the Fed or maybe the Chinese central banks or maybe Russian central banks or maybe European central banks. We don't know what's going on under the surface. No one can track this. The second part of this panel here in this chart is kind of meaningless because I know for a fact that this data is probably incorrect anyways, but we do that there are central banks buying, there's interest from those institutions, and that drives institutions like pension funds that have built those 60-40 portfolios. And there's something that I highly doubt that in 10 years from now, gold will be a large portion of those portfolios in the future. Try to go quick here, but if you look at the global gold production, there's so many reasons why we've had really two main gold markets since the 70s, one in the 70s and one in the early 2000s. Since then, those are really the two main cycles that you want to be invested in precious metals. You want to be invested also in the miners. You want to be taking risk in the mining industry as well. This is why we launched a fund to tackle that opportunity. And I'll explain some of the inefficiencies that I'm seeing as well. But in this chart, while everyone has different reasons for why those two bull markets occurred, the main reason for it, in my opinion, was also linked to the supply side. If you look at global production of gold, it was declining on a secular basis in both times that we saw this gold market. I think we're about to see another one for many reasons. Number one, the green revolution is forcing a lot of the major companies to, instead of investing in gold-only projects, and this is not happening with virtually all of them, but just there is a significant amount of pressure from institutional investors pressuring those businesses to shift it away from gold-only projects to maybe gold and copper, maybe gold and other critical metals that are part of the green revolution. And this is certainly happening and causing most of those companies to reduce their production in a big way. Well, guess what? If you look at the production of most of the majors, it's all declining. Barrick, AngloGold, Kinross, Goldfields. You look at Newmont, it's the same production of gold it was about 10 plus years ago. So it's really interesting that this is happening across the board among most of the gold producers. And look, I speak with a lot of institutions. I am also chasing their money because I need to I'm building a fund on top of this. So what the question I get the most from investors is, why in the world do you see gold near all-time highs and the revenue or this underperformance, this chronic underperformance of most of the major companies? Well, I have an explanation for that. I think major companies lack vision. They lack vision in many ways. They are not investing. They're returning more capital to shareholders from buybacks and dividends like we've never seen before, than even investing in their own businesses. And it's interesting because we have here in this panel, other companies are more on the developer side. And it's very interesting to see the difference between majors and developers. Majors are just completely not spending any capital into increasing production. They're not being pressured by investors to do any of that. The developers are doing something very different. They are actually increasing CapEx. CapEx from the developer side is back to the 2011 levels. That is really interesting because if you backtest what's happening in the oil space, And why the oil space? Because they've been in a bull market, in a commodity section, has been in a bull market for the last 2 years. The companies that have benefited the most are the companies that are increasing production and increasing capex, not the ones that are paying dividends and doing buybacks. And the difference in performance between those two buckets of companies doing returning capital to shareholders versus reinvesting in their businesses, it's about 50% or so in an annual basis for over the last 2 years. So it's really interesting data. So to me, the main reason why gold majors are underperforming is because we're tracking most of the gold companies, the major ones, that haven't done anything. They're not in the business of mining anymore. They're in the business of retiring aging assets with declining production, not spending any capital on new discoveries, on exploration. Budgets have been basically going away. And so their own existing reserves, in terms of the quality of those reserves, have been deteriorating over time. I think this is well known in the industry. So what do? It's creating huge, or someone to create a new major company, number one, someone to be very creative, number two, and also institutional capital is going to have to chase inefficiencies in the other parts of the industry, not the producers, but maybe the developers and maybe the exploration companies that have been completely underinvested and do provide that level of probability of at least some level of success that is completely not priced in the markets. Most of those assets today are priced as of a company that will probably fail. And so I don't agree with that at all. I think there's a case to be made that you can go back to the 90s before we saw the tech revolution and take a similar approach of a venture capital approach where you make many investments, very diversified across the board. And, I think the probability of you finding major discoveries is much, much larger than what the market is telling you. And so, yes, buying gold, buying silver on the physical side is very attractive. I think it's one way to protect your portfolio, especially depending on your risk profile. But the way to really asymmetrically make money in the gold cycle is to make new discoveries, is to invest in exploration assets and development assets that will become the next Newmonts and Barricks of the world, particularly at a time when the majors don't want to take that leadership role like we've seen in other times. And so to me, this is one of the most exciting times to be an investor. And when I look at this chart, my final chart, you're just looking at the turnover for the TSX Venture, which includes most of those developers and a lot of the companies in exploration as well. And by the way, forget about GDXJ, forget about GDX. I think that the members of most of those ETFs don't represent what this industry really is about and what their opportunity really lies ahead. In my view, the real opportunity will be in exploration and development assets that are high quality and requires further knowledge. Yes, we've partnered with a geologist to know that. I'm not a geologist, but I understand the financial side of or aspect of most of those companies. And so I think taking a systematic approach into this industry and maybe a hybrid venture capital approach as well is probably one of the most efficient ways to make money. I think there's a lot of ways to skin the cat. Some companies here, even in this presentation, look very attractive, especially at the valuations we're seeing, way more attractive than the majors. At least they're going after production. They're going after something that will actually make money over the future and doing what they're supposed to do, which is being mining businesses. And so my apologies for a little bit of an angry presentation, but this to me is a narrative that we need to do in this industry. We need to require and create a pressure in most of those boards. And this needs to come from investors for those major companies to start chasing not only increasing replenishing their reserves, increasing their production, but stop looking at cost and other things that it's just nonsense. It's just total sign of us being in a chronic underperformance environment of this industry. We need to go back to mining, go back to production, and go back to growing businesses. That's going to attract institutional capital. And in my opinion, this is, I think also a major opportunity for retail investors to come in and also try to understand this market as well as I think a lot of folks in this panel provide a lot of that knowledge to you as well. So thanks for having me in this presentation. I appreciate the time.
Thank you, Tavi. That super interesting presentation and certainly food for thought for those of us looking for, trying to figure out how to structure a portfolio for this gold opportunity that's clearly developing in front, the classic top down, do the big ones first and then move down. That's not what you're saying. That's not where you're saying the opportunity will lie. And to be honest, that's not what is developing so far in this space. If we go back to some of the stats that I showed about which stocks are doing what so far in this market. We have a lot of questions, and I am unfortunately just going to cut it off here because we're already 20 minutes over time, and I certainly respect people's time. So like I said, the Metals Investor Forum is going to make sure to send those questions to the intended answerers, and we will do our very best to send those answers to you. That's the best we can do because there's just not enough time to get to all of your fantastic questions. So to close things off, I just need to say that the random winner of those who did submit questions, the winner of today's silver coin from Guanajuato silver is Rick Duff. Rick, congratulations. Matt Bennett from the Metals Investor Forum will get in touch with you and find a way to deliver that silver coin. And with that, I'm just going to say thank you all for your time and attention today. We certainly appreciate you giving us that, and we love the opportunity to talk to you and to each other. So thanks very much, and we'll see you around these parts again soon. Take care, everyone. Bye-bye.